So let's now focus not on the sentiment but on the economic reality. Whereas the big reset button has been pressed, how will life change for companies which are in the NBFC business, microfinance business, loan against property, and those who are financing largely in the two-wheeler and in the four-wheeler space? So to understand all that and much more, I have with me a very special guest, Vellayan Subbiah, Managing Director of Cholamandalam Investment Financials. Vellayan, good morning and thank you for joining us. You know, the way your stock has plunged, everyone is of the view that there is going to be serious disruption in the business. So let's first understand the real impact. I don't want to talk about sentiment. Sentiment can do dangerous things in the market in the short term, but the business impact in this quarter, next quarter, how do you think the tremor would be felt?
So Nikunj, thanks. Actually, I don't think so this quarter we will have impact. But I think that the impact will be muted. It's not going to be as significant as people think it is, and we don't think there's going to be any impact to the business, negative impact next quarter. So we actually think the next quarter might pick up and actually be much stronger than most people even expect it to be, including kind of our own expectations. If you take our two businesses, what's happening is that in the vehicle finance business, obviously there are a lot of difficulties right now, with no cash available in the system, and so you are seeing that slow down. But my sense is by the end of this month itself, by the end of November itself, there will be enough cash available in the system, and so we should have a fairly normal December in terms of the vehicle finance business and the LAP business. So I actually think that the discomfort is only going to last for this month, the month of November.
That's quite surprising and relieving, in fact, Mr. Vellayan. And good morning, firstly. What about the rural economy? Do you sense that the damage or the hit perhaps could be a little more longer lasting than a month that you're talking about when it comes to the rural play, which was just about sort of picking up after a good monsoon?
Yeah, actually, see, the biggest thing right now is obviously kind of, ensuring that, the farmers have enough money to sow. I think that for the most part that is going to happen. See, basically, if you talk about the numbers, what the government has clearly said is that anybody with less than 2.5 lakhs, there's no problem. And for farmers depositing, there's no problem. So basically, actually, for the farm population, there is very minimal impact. If it's just the inconvenience of going and basically having to switch the existing currency that they have for new currency. Beyond that, we don't see kind of as significant impact on that population at this point in time. And our belief definitely is that that the impact is not going to kind of last much longer than a month or so.
Mr. Vellayan, the question is also not just about, your company, but I just wanted to get a sense. The common perception is that for consumer financing NBFCs, the damage will be a bit more lasting, and you can't place a finger until how long. Simply because for a large portion of the country which used to have some bit of unaccounted money coming in and used to do their daily household spends via that money, now they have to switch to even daily household spends via the official account, and therefore the consumer the consumption activity, the high-end consumption activity, be it white goods or be it certain other pockets, will get impacted severely for the next couple of quarters. Is that a reasonable estimate?
Yeah, so I'd say, see, here there are two ways to assess it, right? The way we're looking at it is trying to establish what percentage of net wealth in the system, or net worth or savings, or however you want to look at it, is actually getting destroyed. In our assessment overall, right, if you put this number at somewhere between 1 lakh crores and 3 lakh crores, our assessment is that the amount that's getting destroyed is perhaps 1 to 2% of, I would say kind of closer to 1% of net wealth or net worth in the system. Now, obviously, the issue is that 1% is not evenly distributed, right? So it's an average number. So the key is, if you kind of look at it, for example, for a salaried person that basically, does not indulge in kind of any activity on the kind of with black money at all, there's actually zero impact on that person, right? So, you have to look at it from that perspective, saying why should that person's consumption fundamentally change? So we are actually saying that, the population that will get affected is where more than 10% of their net wealth is getting destroyed through this process. And there will be a population like that. And our estimate is probably kind of, 5% of kind of small and medium enterprises that deal with the kinds of businesses where they will have, net wealth eroded in the range of 10% or more. So only that population which should fundamentally change its consumption patterns, right? Traditionally, this population has saved in gold and real estate. So you can kind of definitely see those two sectors be affected in a certain way. From a consumption perspective, one argument I would actually make, if you talk about loans, for example, is I would say the demand for loans would actually go up. Because right now you had an informal black money economy with its own loan system going, right? Now that loan system has just gotten shut down. So all of those people now have to come to the formal economy for loans. So my thought is actually that the demand for loans, both for our LAP, loan against property loans, and other loans, will actually pick up. Not just ours, but other consumption loans as well will pick up because a whole channel for funding has gotten shut down.
The reason why Vellayan NBFCs did well is because banks were vacating that space, and banks frankly had limited capital to lend. Now banks have surplus CASA and they could come and start lending in your turf. Is that a challenge?
Well, see, I think basically this argument has been put forth. I'd say at least for the last 10 years, right? I call it kind of the death of the NBFC argument, right? For at least last 10 years, people have argued that, hey, listen, kind of when banks are there with more CASA, with lower cost of funds, why is there a reason for NBFCs to exist? The fundamental reason why NBFCs always exist is because basically, we've been at the frontier, right? I've always argued that kind of, right, financial inclusion in the country is driven by NBFCs, right? At the forefront. Once NBFCs kind of develop a particular market, then when the market is well enough developed, only then do kind of banks jump in. So if you take the level of financial services penetration or under penetration in the country, I have absolutely no doubt that the demand for NBFCs is just going to go up. Actually, Nikunj, if you look at it, kind of the amount of demand pickup that's going to happen for loans because the whole informal loan economy has gotten shut down is huge, right? Who's going to take up all that demand? I mean, just the banks, there's no way they can cater to this amount of demand. Absolutely not. Right? And even with CASA, the whole argument is how long is the CASA going to stay in the system? How many people are just going to put the money in and take it out versus how many people are going to leave the money in the bank account? Same argument with JDY, right? How many people kind of actually left the money in the bank account and how many dormant accounts do we have? Are we going to see a similar pattern? So all of these are things that, that I actually think will continue to kind of actually favor people who are looking to lend to the non-salaried class in this country.
Well, let's hope the impact is short-lived. Thanks so much, Mr. Vellayan, for joining in today, and hopefully the quarters ahead are better. Hopefully we'll only see the impact in November, and December will see normalcy soon. But thanks so much. We look forward to talk to you in December sometime to get an assessment of how are you seeing the month of December as well. Thanks for joining in today. That's not a very perturbed management and clearly saying that the impact will be short-lived and will not last long. So let's hope that is indeed the case. By the way, just before we go to Syntex, and I know management is waiting by, but just want to mark what's happening. Eicher Motors is down 9%, Bank of Baroda is up 8%. So clearly autos, NBFCs are bearing the brunt, banks not so much. I mean, Eicher Motors is talk of the town at 25.